Okay, thanks very much, Nick, and let's get into the evening. Our first guest is Jason Waller from InteliCare, and as Nick said, InteliCare are looking to list on the ASX very soon. In fact, the book opens next week, so if you like what you hear tonight, please by all means reach for your checkbooks next week. Talk to Nick or Jason Skinner or the team at JP, because JP are handling the IPO for InteliCare. A little bit about InteliCare Holdings. It's an Australian technology company providing an innovative artificial intelligence or AI solution to support independent living for the elderly. The company's platform uses an Internet of Things smart sensor and artificial intelligence to provide family and caregivers real-time updates on the well-being of residents using the technology, supporting higher levels of care and mitigating the increased cost and burdens of aged care. InteliCare intend to undertake their IPO, as I said, in the next few weeks. Tonight's speaker from InteliCare is Jason Waller, the Managing Director and CEO of the company. Jason has 25 years plus experience in multiple executive roles at global and national levels. Interestingly, Jason is also a commanding officer for the Royal Australian Air Force, and more recently as CEO, he was the CEO of an ASX listed company that some of you may well know by the name of Spookfish, which he guided through to an acquisition where it was taken out for $136 million in 2018. Ladies and gentlemen, Jason Waller from InteliCare.
Thanks very much. So, as we said, I think this is a perfect storm for InteliCare. What we do is we put smart sensors into people's homes. We turn it into a smart home. That's uploaded to an Internet of Things platform, and using AI, we then learn what's normal behaviour over the period of about a week, and we send alerts out to families and caregivers when something's out of the ordinary. And by doing so, they avoid or defer the cost of aged care. And in a COVID-19 environment, we can also reduce the risk for those caregivers and also look after people who are in quarantine. The aged care market itself is about $20 billion in Australia, and 85% of that is government funded. You think of it as falling into two broad categories: nursing homes, residential aged care, and also home care services. So that's when someone's living at home independently and an assessor comes around, they get a care package and they expend that care package on things like safety systems in their home and intelligent solutions like ours. The problem is that the aged care market is growing rapidly, but there's a structural issue. The taxpayer base to support it isn't growing at the same rate. And so we see two broad problems. Firstly, aged care homes, only 51% of those are not making a profit. And if you're a care provider, their EBITDA per person per year has been dropping dramatically over the last 5 years. And the result has been a Royal Commission where we see care services under stress and poor behaviours resulting. The Royal Commission is great for us, but I think it's starting to prompt the wrong conversation. The conversation is tending towards government funding their way out of it. But when Morrison chipped in $500 million as a response to the first Royal Commission interim report, all that bought was 10,000 of those home care packages. When we have 120,000 people on the waiting list, we're seeing more people die waiting for home care services than those packages provided. So the aged care system is broken. And when that happens, you have your mum or dad or grandparent living at home and the kids go, that's great, mum, happy for you to live in your own place, but we're worried about you. And the only technology they can turn towards is pendants. The duress systems, the little alarms they press if they have a fall. They don't work. In 80% of falls, people don't use them either because it's not charged or they don't have it on them, or in 30% of those falls, they had it on them and it was charged and they didn't press it anyway. And that's because they don't want to be a burden for their family. So more importantly than the question of has mum or dad had a fall, the higher order question is, are they likely to have a fall and is that changing over time, and what's their overall wellness? And this is where our AI steps in. So what we do is we turn a home into a smart home. We install passive sensors. There's no cameras, nothing active in there. It doesn't require them to activate anything. Around the home, they're all self-installable. You could do it yourself. And it preserves the family's most important and their largest asset. Those sensors themselves, you can see them in the top left there. They're commercial off-the-shelf sensors, movement detectors that tell us when someone's up and about each day, so they've arisen. We couple those with power sensors on things like the kettle and the microwave to give us information on their meal preparation. And also things like door sensors, which we put on the pantry and the fridge and in the front or back door, so we can start to measure social isolation and build a very rich data picture of their overall well-being. We don't manufacture those sensors, nor do we purport to do so. Our secret sauce is the IoT platform and the AI that sits behind it. The only thing we manufacture is the hub, which you see on the top right there, which is connected to the internet. And the reason we don't want to manufacture sensors is because there's so much technology moving so fast, we want to harness that. So we built an open architecture IoT platform, which means we can strap on the best and brightest sensors that are out there. For example, Amazon Alexa, Google Home, Apple Watches, whatever you want. And we've done that already with the Department of Communities in Western Australia, where they wanted a bed sensor. And we were able to deploy that into one of their mental health facilities in a matter of weeks after we sourced it in the open market. Once we have that picture, we then start to give alerts. For example, we talk about their ability to go to the toilet. Have they gone to the toilet more at night? If they've done that, it can be a sign, for instance, they've got a urinary tract infection. A UTI is a potential cause of delirium, and delirium is one of the top 3 causes of falls. We look at things like meal preparation. Are they looking after themselves? Are they doing the washing? We also look at things like their movement around the house at night. We had one resident whose daughter was concerned about her mum. Her mum said she was sleeping fine. When we put InteliCare into her house, she was up and down 40 times during the night. And that was an indication of early onset dementia. So we start to get ahead of the curve, and you can start to put in preventative measures rather than react. The way I describe it is giving a pendant to someone is like giving a mobile phone to your P plater. It won't prevent the accident, it'll just call the ambulance or the tow truck afterwards. So we don't want to find them at the bottom of the cliff. We want to see if they're marching to the cliff and are they going to step off the edge. So we market it through 2 core product suites, InteliCare Pro and InteliCare Home. InteliCare Pro is targeted at those 85% of people who are receiving government funding. And it's provided to caregivers and care organisations. It allows them to triage their clients. So the ones that are all green, they sit down to the bottom. The ones that go amber or red percolate to the top. And they can provide higher quality care services and look after more people at once against the one carer, so they can rise to meet demand, and they can de-risk their operation. So instead of finding someone's had a fall and was discovered on the ground 3 days later, they can get ahead of that curve. And that happened in one of our client suites, where they found a fall had occurred within 25 minutes of occurring. InteliCare Home is for the DIY market. So think of it like the CCTV market at the moment, where it used to be that you get someone to come in and install your home alarm system, and they'd monitor it for a fee. Now you go to Bunnings, JB Hi-Fi, buy that yourself, and away you go once you've downloaded the app. That's what our home product's for. The home market is 3 to 5 times larger than the pro market. We're starting with pro, but I'll talk about how we're going to migrate to home. So the value proposition is pretty straightforward. For those living at home, it saves them the cost of selling their home and moving into aged care. For care providers, it allows them to de-risk the operation, provide higher quality care, and also increase their productivity. So instead of having, say, 50 people per carer, they go to 80. In a COVID-19 environment, it also stops that carer becoming a transmitter of the disease because they can monitor people remotely, and governments can use it to put out to people who have been self-quarantined. We put out an email over the weekend to all state CMOs. We've had very positive traction from 3 of those state governments, and we're going to explore that further. Insurers is a great one. Insurers pay each other at the end of the year if they have more people over 65. So Bupa, who is a very young age group, has a low payout ratio of 70%. HBF has a higher aged population, and they pay out at 95%. So Bupa pay HBF money at the end of the year, millions. And they've said to us they're prepared to bundle this package so that with InteliCare, they attract more people over 65 and reduce that payout ratio. For governments in COVID-19, it's clearly about reducing those hospital readmissions. And we already have seen that as the case where we had one of our clients, he had to do leg stretches each night, he wasn't doing them, he had a circulation issue. We put InteliCare in his home, and they were able to monitor, his carer could monitor who was doing his leg stretches and prevented him going back into hospital. The market itself, there is no dominant player in this market. It's very much an emerging space in terms of smart home technology. The dominant player is pendants, and you can see there that Choice Magazine won't even review pendants anymore because they're so fallible. So we think we'll eat their lunch. Some of the organisations there, Billy and Essence, they've got pretty good products. They're smart home, but they have a closed architecture. They're sensor manufacturers who look to sell more sensors. Billy is Samsung SmartThings rebranded. Essence is an Israeli security company. 80% of their business is in the security industry. They can't strap on other sensors. They can only strap on the ones they build themselves. So we're going out through a SaaS model. Think of it like the mobile phone market, where we sell the hardware itself. People pay an upfront fee for the hardware for a standard configuration. At the moment, we've got a pretty high margin on that, around 60%, but my aim over time is to reduce that to increase unit sales, because the real cream, like any SaaS model, is in the monthly subscriptions. Our monthly subscription is about $60 a month retail, and to give you an idea, a pendant is $45 a month and does nothing like we can do. So over time, we're looking to really ramp up those unit sales. How are we going to do that? The way we've done it already. So we had, our genesis was actually in 2017 with the WA Country Health Service. From there last year we had 3 large commercial pilots. They all resulted in ongoing sales and will give us $500K of revenue. But these initial sales are through that top line, through care service providers who are going out providing those services into people's homes. In WA alone, there's about 200,000 people in that market. If we get 3% of those, we'll go cash flow positive. And that's giving us feedback to then go into the home market, where success for me looks like we're on the shelves of Bunnings, JB Hi-Fi and Harvey Norman. We've also been partnered with Microsoft. They selected us, we didn't select them. They've given us $250,000 in platform credits, and they've put their sales team alongside ours to sell into ASX 200 and Fortune 500 companies. They pay their sales team a commission for selling InteliCare. So what does the news flow look like post-listing? I think you'll see us sign up more clients here in WA, particularly in the home care environment. We'll go to our Gen 2 product, we'll get rid of that hub, and it'll be all tablet-based. And that'll bring our hardware costs down by about 25 to 30%. We'll roll out further in the eastern states, and finally we'll build our off-the-shelf product where it's all packaged up, has the logistics supply chain, and we can go out onto retail shelves. And at that stage we've scaled. So it's an execution problem. The board and myself have extensive experience in IT and technology, including EPD. And the offer itself, you can talk to JP Equity about that, but we're raising a 5.5 mil at 20 cents. So in short, you will see this become the norm in the next 5 to 10 years. It's an emerging market, and I think we have a first mover advantage, which we intend to take clear lead on, particularly in this perfect storm. Thank you very much.